So just from the names, Trendline Trading Strategy and Trendline Breakout Trading Strategy, right? Trendline Trading Strategy. When do we use the Trendline Trading Strategy? When the market respects the trend line, right? When the trend line is being obeyed. And when do you use the Trendline Breakout Trading Strategy? When the trend line breaks. So basically for the Trendline Breakout Trading Strategy, you are going to be looking at what do you do when the trend line breaks, right? What are the options you have when the trend line breaks? What are the options you have when the trend line is being respected? Trendline Trading Strategy. What are the secrets or what are the things you do when the trend line is being disobeyed? The Trendline Breakout Trading Strategy. And just like I said, trend line is one of the most important aspects when it comes to trading, especially technical analysis, because you want to trade with the trend. So in this particular course, we are going to be looking at these topics. We have viewed these are the topics, the main topics we are going to be looking at. So under Trendline Trading Strategy, we are going to be looking at how to draw a valid trend line, right? How do you draw a valid trend line? There are sometimes I might draw a trend line, but the trend line is not valid, right? So how do you draw a valid trend line? When is the trend line still valid and when does it become invalid, right? You might draw a trend line, it is valid. You want to come tomorrow, the trend line is no longer valid. So how do you identify if a trend line is valid and when it becomes invalid? Understanding some common mistakes in drawing trend lines. Normally, when you're drawing trend lines, there are some mistakes you might make, right? We are going to look at those mistakes and how you can avoid them. How to know which trend lines are most likely to hold and which ones will not. Trend lines, basically, we have weak trend lines and we have steep and we have strong trend lines. Now, steep trend lines or gentle sloping trend lines are considered to be the strong trend lines, right? Why the steep trend lines? Because at times you draw some trend, you discover that it's very steep. So the steep trend lines are considered to be the weak trend line. We are going to look at that and some examples. Support and resistance and how to use them to your advantage. So this now, support and resistance working in accordance with trend line, right? How do you use them to your advantage? That's using support and resistance and trend line. Understanding the trend and know when they might be starting and ending. Very important. You want to know when the trend is on an uptrend. You want to know when the trend has changed. It's very important. So you should not be looking at an uptrend. When you see an uptrend, you say, okay, this trend has changed. Or you should not be looking at an uptrend when the uptrend has ended and you are still considering that you see an uptrend. So that's very important. Now then we are going to look at technical analysis, the best way to analyze the chart using trend line as a whole, right? So that's what we are going to be looking at under this particular Trendline Trading Strategy. So back here to the introduction for Trendline, we basically have the overview of Trendline right here, any time frame. So for Trendline, it's the same like support and resistance. We started marking from the higher time frame down to the lower time frame. Right here, on the trend lines, the time frame does not matter. So you can draw a trend line from any time frame. As a matter of fact, when we go down, we are going to look at how to analyze the market using just trend line, right? Basically, you do top-down analysis the same way you do it for support and resistance. Currency pair, you can trade any currency pair, any trend line, any commodity is always going to either follow the trend, either uptrend or downtrend or ranging, right? So you can always use the trend line on any of that. Indicators, you don't need any indicators. Now, for an uptrend, this is a diagram of an uptrend, right? You see that the market is on an uptrend. Now, just an illustration. On every trend line, right? Before you place a trade on a trend line, there are things you need to consider. The first thing first is that you need to be able to draw your trend line, which I'm going to show you guys as we go down, how to draw a valid trend line. Once you have drawn a valid trend line, you need to wait for 2 touches before you place a trade, right? Now you see this illustration right here, you see that we have an entry and we have an exit. This is our entry and this is our exit. Now I'm going to explain why we have an exit here. Can somebody explain? Have you asked us just from looking at the diagram, can you understand why we have an exit here? Good. What I explained today, right? Previous high. So the first touch, the confirmation touch, then on the third touch now you have your entry. Unlike support and resistance where it's going to come and respect. This one is a trend line, right? Now on the third touch now you have your entry. Where's your stop loss going to be? Below the trend line. So what's protecting your stop loss? The trend line, right? Now, on your entry now, your stop loss below, your take profit has to be above. Your take profit is on the previous high. That's why you see we have exit here, right? Previous high. Why is our take profit on the previous high? Our take profit is on the previous high because the market has respected this point A in the past, right? Technical analysis, what has happened in the past will predict what will happen in the future. So at this point, we are aware of the fact that the market has respected this level in the past, it might likely respect this level again in the future. So that's why your exit point is there. Now, the trade might pass and break this level and go up today. Tomorrow, it might respect. But majority of the times, trading is based on probabilities, right? So majority of the time, it's always going to respect the previous high, right? Now, once you have entered your trade, because the market is on an uptrend, you should not be looking to sell from here, right? What you should be looking to do is to wait for the market to come down again, then you have another buy opportunity. That is you trading with the trend, right? So with that now, you get high probability trade. So it's like the market is always going to reject. Once you reject and come back, what happens? You touch the trend line again. On that point, you have your entry, then your take profit is on the previous high. Is that clear? The same thing for a sell entry, right? The market is on a downtrend, so you're looking for sell opportunities. First touch, second touch, you have your entry, and your stop loss is above, your take profit now is on the previous low, right? So your stop loss is on the previous low, then you have your entry right here, and the same thing goes right down here. So now let's go down and look at details on how to draw a valid trend line first of all, because if you don't know how to draw a valid trend line, then you're not going to be able to get to this level. So these are just examples of the opportunities you can get with trend line. First touch, second touch, buy entry, right? The sell opportunity here, first touch, second touch, sell entry. Now, how to draw a trend line, how to draw a valid trend line. When you open your chart, first of all, what do? You look for the previous highs and the previous lows. The highs and the lows. The highs are the levels that the market has expected above. The lows are the level that the market has expected below. So if the market went up and had a turning point, this is a high. If the market came down and had a turning point, this is a low. So what you want to do is that you want to first of all identify the highs that you will see and identify the lows. Now, some people always say we see many highs and many lows. Go for the most obvious highs and lows. The one that you can see when we talk about most obvious levels are the one that you can tap your neighbor. Your neighbor is still going to show you the same highs, right? You tap the next person is still going to show you the same highs. Those are the most obvious levels. So if you look at this chart right here, you see that we have our highs, right? Then we have our lows. Now that's the first step to drawing a valid trend line. Once you have identified your highs and your lows, now you have to draw your line from left to right. That's the next step, right? You're drawing a line from left to right, either from down from left to right or from up from left to right. So we have identified our highs, we have identified our lows. What's the next thing we have to do? We draw our line from left to right, and it goes straight. The trend line does not bend. It does not come like this, then bend like this, right? You cannot bend the line. You cannot bend the trend line. So it goes straight. Now this one, now you take it from here, it goes straight. You get? This is the example down here. So from here now, you draw your line from left to right. So the first step is how to draw a valid trend line. Identify obvious peaks and troops. Peaks and troops are highs and lows. That's another name for the peaks and troops. So the peaks are the highs, then the troops are the lows. So once you have identified your obvious peaks and troops, then you connect the peaks, right? So connecting the peaks right here, connect the troops. You connect the troops down here, right? So from left to right. You are not connecting from this to this way. You are connecting from to this way. The market leaves from the left and is going to the right. So you want to draw your trend line, then not just join to ally it on this other high. Why? Because you are waiting your entry on the next touch. So you have to draw it across. You get? So that the next time when the market is approaching that level now, you have already draw from the previous highs or the previous lows. You get? But now if you draw and allow it here, the next thing is that the market might come up here. Might be this market has shifted already, right? Now you're going to see that, okay, this drawing it from this side to this side, then giving this allowance is to give you guidance. So that when the market is approaching this level, you are aware of the fact that it shows that there's a trend line I had drawn in the past, right? But if you are drawn and allowed just this level from to here, coming up, you don't have that awareness that, okay, the trend line is around this level, you get. So you draw and give that allowance. Once you draw and give that allowance now, you have your trend line. What you have to do now is to wait for the market to come to meet that same trend line again, maybe the third time, or maybe the fourth time, or even the fifth time, right? With that now, all you have to do is to wait. That's why we always say that 90% of the time as a trader, you're always going to be waiting. You get. Once you have drawn, you have marked your key levels, you're always going to be waiting. And even as you are waiting, it will take you just maybe 1 minute to place the trade. What you do, you still now be waiting. Either hit your stop loss or you take profit. So 90% of the time, you're always going to be waiting. Now, we look at the outer trend lines and the inner trend lines. The same like we have the major levels and the minor levels on support and resistance, right? The major levels are the levels on the higher time frame. The minor levels are the levels you get on the lower time frame. The same with trend line. Trend line, we have the outer bound and the inner bounds. The outer bounds are mostly the main levels you are going to see on the higher time frame, right? As you are going down to the lower time frame, there are still going to be key highs and lows in between that you do not see on the higher time frame, right? And you cannot ignore the highs and lows you see on the lower time frame. Same with support and resistance, right? If we mark on the higher time frame, we need to come down to the lower time frame and mark on the lower time frame. So you cannot ignore the highs and the lows on the lower time frame. So once you mark the higher time frame, right, you come inside, you're still going to see highs and lows. Because we mark to go directly, so we miss these levels and we cannot allow these highs and lows, right? So we'll come here, we'll identify our highs and lows here, then we'll have our inner trend line, right? Now, for most beginners, the confusion begins when they look at the chart and see too many lows and highs. They just cannot figure out which tool they are going to use to draw a trend line, right? And like I said, which one do we go for? The most obvious ones, right? Because the confusion is always here. You look at the chart, you get confused. Which one should I go for, right? So you look for the most obvious ones. Now let's go down to this chart. Pay attention to this chart right here. How many lows do you see down here? How many? 6, 3, 4. The most obvious. 4, 6, 4, 5. 3. Now, looking at it, right? If we have seen the most obvious ones, for you to confirm, what do? You draw your trend line. Now, if I come to draw my trend line, if I want to draw my trend line, I wanted to actually use a direct line. My hand is going to be shaky. If I wanted to draw a trend line, right? You see that how many do we have? How many has the trend line touched? 5. Okay. How many levels? 4. Okay. Still go down. Is this clear now? 4, right? 4. So you look at it, you see the most obvious levels. Probably you're confusing this or this one, right? But now, going down, drawing the right trend line, drawing the trend line the right way, you're going to see that the trend line has to touch the peaks of your chart or the peaks of your candle. You'll see that one of the mistakes most people make in drawing trend line is that they draw the trend line to pass in between the bodies and the wicks of candlesticks. So if you consider that we have 6 trend lines here, then you're going to be making the mistake of drawing to cross across the bodies or wicks of candlesticks. That's when you see that, okay, maybe I can be having 6 because I want to add these ones. You get, which is a mistake. But now, if you are drawing knowing that, okay, for you to get a valid trend line, it has to touch just the wicks of the candlestick. You don't have to pass through the body of a candlestick. Then you are going to see that you have 4 touches. You get? Can you pass through the wicks? Yeah. Okay, now, most of the times, passing through the wicks, when you are drawing, respect the wick. But now, you could respect the wick. For example, this third touch. Let's pay attention to this third touch. What happened? That third touch passed through the wick. But now, why did the third touch pass through the wick? On the first and second touch, respect the wick. You get? Respect the wick. Now, after this first and second touch, you are waiting for the third touch now to get your entry. Now, what happened here? This candlestick break the trend line. But what happened? It closed above, right? We said yesterday that if it breaks and goes back and closes above, then the level is still valid, right? So at this point, the trend line has actually break, right, but closed above. So this point is still valid. So when you are drawing on your first and second touch, you are maintaining the wick, like right here, right? You see that we respect the wick, but at this point, you see that it passed through the wick, right? But passing through the wick now is basically just a confirmation. We're waiting for the 1 hour candlestick to close below, but it did not close below. It went back and closed above. What does this wick here signifies? Rejection, right? Sellers took it down and buyers were able to reject back up. That is your confirmation. What does this one here signifies? The same thing. Sellers took it down and buyers were able to take it back up, right? So that's our confirmation. These two first points are very important, right? Once you get these 2 points right, then you're waiting for your third point here. Your take profit is going to be here. Sorry, you did not mention that. Your take profit is going to be here. You get previous high. Previous. This is the previous high, but not like the direct previous high. So your take profit has to be directly on the previous high. So at this point now, our take profit is going to be here. You get. And most of the times, you cannot even cheat these things. If you look at it, even if it breaks, when the market left from here and came here, what happened? It consolidated. There's no way it's going to pass this level. Nothing happened, right? Now the same thing happened here. From here, what happened? You reach here, went back down, break and retest, and it goes up. You get. So you need to shine your eyes. When it comes to technical analysis, when you understand these things, now it's left for you to look for it on the chart, right? It's left for you to see it on the chart. And when you see it on the chart, you know that, this is what I have seen, this is what I have been taught. You get. So normally your take profit is going to be here, your stop loss is going to be below. And if your stop loss is below now, you see that on this trade you have like a 1:2.5 risk to roll ratio. On this other one, you see that you have like a 1:3 or even 1:4 or 3.5 risk to roll ratio. You get. So at this point, you have good trades, your risk to roll ratio is intact, your confirmations are intact, and you are good to place your trade. Just from understanding how to identify a trend line, draw a trend line, and wait for your entry.